Ladies, time has expired. I now recognize myself for 5 minutes. Vice Chair Barr, I want to thank you for three things. Number one, your accessibility to me, our conversation, our back and forth. You know I've been critical of the original proposal, but I really credit you for your willingness to listen, both to members of Congress and the public. I want to also thank you for your announcement at Brookings about broad and material changes. That reflects, again, that you listened to the 90% of the comments that came in that were negative, that were critical of the original proposal, and I appreciate your willingness to listen to that. Finally, I appreciate the fact that you've committed here today to waiting until the new regulators in place to collaborate on, as we discussed, a durable and lasting proposal that provides certainty on this, but also that takes into account the comments. When I was recently in Basel, Switzerland, and I discussed with the Basel Committee the original proposal that you unveiled in July of 2023, they acknowledged that that original proposal was inconsistent with the capital neutrality of the Basel Agreement, and they acknowledged that what you originally proposed was actually gold plating of capital standards on U.S. institutions. Will you commit in a re-proposal that you will commit to a more capital neutral approach that actually does bring our standards in line and harmonizes our rules with the international banking standards?
Congressman, first of all, thank you for your very kind comments. I've also very much enjoyed our give and take over the last 2.5 years, and appreciate also your willingness and to go with Congressman Himes to Basel and really talk to folks in the Secretariat. I think that's a terrific thing for Congresspeople to do. In terms of the capital proposal, as I said, I put forward, along with my colleagues at the FDIC and the OCC, a re-proposal in September. I'm looking forward to getting input from new colleagues at the OCC and the FDIC, continue to engage with my board where there was broad support for that re-proposal. I haven't made any determination about the right set of trade-offs going forward. I look forward to getting input from others and then to having the comment. I can't commit to a particular thing until I understand the full range of public comments and the right way to address
Well,
it.
as we discussed, I see utility and international harmonization, but the goal should be economic growth and American competitiveness, and I urge you to keep that in mind with your new colleagues when they come in. Vice Chair Barr, one other question. I introduced the Congressional Banking Regulation Priorities and Accountability Act, and that requires enhanced consultation by federal regulatory agencies with Congress and the public with respect to your engagement with these global governance bodies, like Basel Committee, like the Network for the Greening of the Financial System. I think we need to protect U.S. sovereignty when our central bank goes and negotiates deals overseas. My legislation would ensure that Congress can conduct proper oversight when the Fed or the Treasury participates in these international standard-setting bodies. I shared that legislation with the Basel Committee. They said that they had actually read it. They were aware of this proposal. Have you or anyone at the Fed examined this bill, and would the Fed be supportive of more transparency with Congress when the Fed goes and enters into agreements overseas?
Congressman, first let me just say I think the oversight of this body is absolutely essential. People often ask me, isn't it hard to go up there and testify? And I say, yeah, it's hard, but it is an absolutely essential part of holding us accountable and providing transparency to the American public.
Right.
And so I'm committed to that. I'm happy to look at the legislation in more detail, and you and I can chat about it and see if we can find common ground or not find common ground on it.
Thank you. Chair Gruenberg, so some of my constituent banks are located in poverty-stricken areas. They can make all the viable loans available in their assessment area and still not meet the Community Reinvestment Act 50% rule, since the amount of the loans are so low. In order for them to keep their doors open, they have to buy participation loans from out-of-market banks to supplement their loan volume. The total of those loans are higher than the assessment area loans available, and therefore they can't reach the 50% in area volume. So the FDIC has an examiner now that is giving our rural banks low marks. Can you address this, and why is this examiner changing the assessment of these banks when previously they were getting high marks on CRA?
Congressman, I'm aware of the issue. I met recently with the Kentucky bankers. we are following up with them and see if we can find a way forward here.
Yeah, the bottom line is, when you have a prior FDIC examiner that's giving our rural banks positive marks on CRA, and now we have a new examiner, and it's totally different, it's whipsaw. That is not good bank supervision, and these banks are providing all the loans in poverty-stricken areas. So I urge you to fix that problem before you leave. With that, I yield.